Hey guys, what is going on? Happy Thursday. We're getting close to the end of the week. Now, in today's video, I'd like to do a technical analysis, first off covering Bitcoin and strategy MSTR, and I'll be playing an update. We'll let Saylor provide to us updates from today's quarterly Q1 announcements. You don't want to miss out on this. So, if you're new to this channel, first off, I would really appreciate hitting the like, subscribing for more related content. Let's begin, guys. We're looking at Bitcoin technical analysis. Today was a nice solid day. In fact, we saw Bitcoin price at one point during the market open with Wall Street, Bitcoin price started running up and it actually got to like mid $97,000, where we are right now, hovering right at that range of like 96,820. We're looking very good as we look at the 30-minute range. We continue to see, just May being a nice start, just May where it was at 94 and it ramped up to, that top point of 97. I think we're at that state where we may very well see a breakout back to that $100,000. When you think about it, we're only about like 3% away from getting back into that $100,000 threshold where we saw Bitcoin hovering in that $100,000 range for a couple months. So this is looking very good. I think that with that retracement that we saw since, that early on prior months ago, we're beginning to see Bitcoin price start ramping up. I'm forecasting somewhere around that 180, 200K as a possibility in the year 2025. And what does that mean for the price of strategy in today's price action? We see relative strength, really going up, which is a healthy signal, along with MACD bullish divergence. We continue to see the price moving up, breaking through that phase one prior resistance, where that's the new support line. Question is, will we even get back to 344? It's possible, although unlikely. We'll continue to see price action. In fact, today price was like hovering around that $400 range, but up until the end of the stock market, it ended at, where we currently are at 381. So one of the key things we want to see is the ability to see the price get back up to that prior retest resistance of 440. And we may very well get off to the races where it'll retest that, 540 range. And then, I'm thinking as Bitcoin starts maturing, breaking into that new threshold range of, 150, 200K, then we may very well see MSTR price in the four-digit range. Not saying that it will happen, but it's very possible that it will. Just based on the fundamentals and the technicals, this company just has the biggest Bitcoin HODL to date. And we've heard about, other big time whales like the new kid on the block, 21 Capital, run by Jack Mallers with Cantor Enterprise Partners. They have something going on as well. But when we look at the business model with strategy, they've been in the game for 5 years, taking that risk early on, buying up Bitcoin. And you'll hear from this announcement from Saylor with interesting updates with the performance of Q1, along with strategy for the upcoming years. Let's listen to Saylor and what he has to provide.
So now I'm going to talk about, the $100 billion question, which is why does MSTR trade at a multiple to BTC NAV? And there's a lot of misconceptions about this, and people, you hear all sorts of things. People think, they don't really understand why. And I think I'd like to share some of my observation as to why. First of all, MSTR, the security, has a compliance advantage over BTC, the commodity, or BTC spot ETFs for many investors. Many investors, either they have their money locked up in funds where they're not allowed by the trustee or the custodian to buy BTC. There are many wealth managers that won't let you buy the ETFs. There are countries like in the UK where there are examples where they would let you buy MSTR, but you couldn't buy BTC. Um, there are places, there are many brokers, they will let you buy MSTR. They won't let you buy the BTC spot ETF. So when the security has a compliance advantage, then there are pools of capital that are going to buy it because their choice is to not get any BTC exposure or to do it through MSTR. That creates a premium to NAV. The second point, MSTR is a credit advantage to BTC. If I have a security trading on the NASDAQ that's deeply liquid, I could borrow against it via margin loan. Maybe I get a SOFR plus 100 basis point loan. That means that I have a lot of capital and now it's liquid. I can borrow against it from a big bank that I trust. I can't borrow at SOFR plus 100 basis points against BTC from my Morgan Stanley or JP Morgan or Bank of America or fill in the name of a big bulge bracket bank. So I can't get margin loans on BTC at all. And in most cases, you can't get a margin loan against BTC spot ETFs. It's very, very hard to find people that will extend margin credit. So this impacts the market in two ways. One, I could buy a bunch of MSTR and hold it forever and just live off of loans that I take against it while it appreciates. And that's a nice strategy. The other way it impacts is if I had a portfolio with, fill in the blank, if I had $100 million of equities, I could buy $1 million of MSTR borrowing the money from my prime broker with no cash down. So people can buy and leverage into a company that has a credit advantage, and then they can borrow against it and margin it. And so you have to ask the question, if you live in a neighborhood and the houses on the left side of the street are eligible for Fannie Mae or Freddie Mac mortgages, and the houses on the right side of the street you have to pay cash for and you can't put a mortgage on, all things being equal, if the two houses are identical on either side of the street, which house is going to have the higher price? And I don't think it's complicated to figure out that if I can borrow the money to buy the house on the left side of the street, I'll pay more for that house because there's no money down and there's 20% deposit. And if I have to come up with cash to buy the house on the right side of the street, I'm going to offer less as a cash buyer because it takes me 20 extra years of my life to come up with the cash. I mean, it's not complicated, right? It's financeable. And BTC is not really being financed. I don't know of any major bank in the world that will finance BTC, and it's very, very difficult, to find anybody that'll finance BTC spot ETFs. So let's go to the third point. MSTR has a higher volatility than BTC. And we talked about it, if Bitcoin is trading with a vol of 50, we'll oftentimes be 80. If it's 60, we might be 90. That results in a higher MSTR rate than, say, the IBIT rate. That means that you have a larger, deeper, richer options market. Why would I want to accept 60% when I could get 100%, right? I mean, it's very simple apples to apples thing. So the volatility drives the options market, drives the yields, attracts capital. The next point I'll make is that the options, they have that higher simple annualized interest rate for those selling vol. And that makes it possible to create ETF instruments like MSTY and IMST. And those ETFs, they basically are selling the vol of MSTR. And they have very, very high annualized dividend yields. So for a typical investor that wants to capture 100, 150, 200% dividend yield by selling the vol, they don't want to, it's difficult to trade in the options market. And so maybe they just buy MSTY or IMST. That makes it easier for investors to monetize that volatility. How popular is this? Well, MSTY today looked like it had 3.1 or $3.2 billion of AUM in it. And IMST has raised something like $40 million of capital in a few weeks, a week or 2 weeks or something, not that long. And so these are attracting capital flows when they're attracting capital that wants to monetize that volatility, and they're part of our emerging ecosystem. And so why MSTR? Because we're the most liquid, we're the most volatile, we're the most durable, and we're the most credible place to get that. So our equity is becoming volatile liquid collateral for traders. And that creates a demand for the equity that drives up the price of the equity as these instruments are delta hedged, or as people buy the underlying equity so they can sell the covered calls. My next point I'll make is that our convertible bonds, they attract capital from a new class of arbitrageurs and hedge funds that otherwise they wouldn't buy BTC, and otherwise they wouldn't buy BTC spot ETFs. So if you're unique, you've got a differentiator, and we're an operating company, we can issue convertible bonds. A spot ETF cannot, and there isn't any comparable type instrument on top of a BTC commodity. That takes me to my next point, which is BMAX, which is another ETF that was launched. It provides investors with a very convenient way to access MSTR converts. So most investors, if you're not QIB or 144A certified or compliant, you can't just buy the convertible bonds. They're over-the-counter traded. But you could buy BMAX, and BMAX buys, it's like 80% or something exposed to MSTR convertible bonds. So that's a unique characteristic of MSTR. Again, the uniqueness, the opportunity is a differentiator. MSTR, the security, is included in QQQ, MSCI, and crypto indices. And as we get built into all these ETFs, that drives passive capital flow. And so, on a day when the NASDAQ 100 is surging up 2%, there's a lot of capital that's going to go into the risk on trade. It's going to go into QQQ. That will find its way to us. That is an advantage over underlying BTC. The BTC ETFs and BTC itself, they're not in the NASDAQ index. And so if you're wondering, why would there be more demand for our stock? Because we're a security and because we do get indexed like this. The next point I'm making is that the MSTR brand is recognized worldwide. And so our brand recognition and our scale, they drive superior investor interest. It's very common, and it's very interesting to note, if you combine this with the next point, many investors, they're obligated to invest in securities, or they're biased toward investing in securities because the history of commodities is not good, right? The only commodity that you could ever invest in over the long term is gold, and gold is considered to be kind of a slow dead asset. So most investors, the great majority of their money is made investing in securities. So when I'm speaking at investor conferences and I'm telling everybody how great Bitcoin is, and I'm giving them 100 reasons why Bitcoin is great, it's not uncommon that they say, well, I decided to buy your stock. I don't have to ask them. They're like, well, I get it. The Bitcoin is great, but my prime broker doesn't handle Bitcoin. And I just want to buy the security. It's quick, easy, it's marginable. I can buy it in 15 seconds. And people can't, it's like, why did Domino's Pizza get successful? Domino's Pizza was successful because people like pizza, and because anywhere in the country, you could pick up the phone, call the operator and say, give me Domino's, and say, hey, send a pizza. And you know that there's a Domino's Pizza somewhere close to you. And it's like, the brand is weaker for the next 100 pizza companies. Maybe their pizza's better, but I just don't know who's in the place I'm traveling to. So it's just like, why do people buy Diet Coke? I go to a restaurant and I ask for some other kind of Coke, they don't have it. And then I ask for Diet whatever, they don't have it. And I get frustrated. And after I get beat down because they don't have it, I think, I'm just going to ask for Diet Coke because I know there's a 95% chance they're going to have it. So you're an investor, you have a lot of money, you don't have a lot of attention span. What is this Bitcoin thing? What's the stock I can buy? MicroStrategy or strategy, I see that on the screen. The brand does matter. It makes things easier. It's if I'm going to buy the third best or the fourth best or the fifth best, I got to research it. I don't, no one's heard of it before. There's a lot of impedance. And so with that, you see, the next point I'll make is that MSTR represents the strongest BTC exposure in the strongest capital market. A lot of people want to buy a stock in the United States on the NASDAQ or the New York Stock Exchange. They trust it. And if you're looking for BTC exposure, give me the biggest and give me it in the safest place. It's very simple. The last 3 points I make on this NAV thing is that Strike is a unique security. It's a lot more leverage than equity. It's a lot more leverage than a convertible bond. Again, as I pointed out, it's quite possible we could sell a lot of Strike, billions and billions of dollars of it that's backed by a lot of equity, and the conversion rate never takes place because people don't choose to convert to common equity. And so you're creating a lot of leverage when you finance with Strike. And you're acquiring a new class of investors that maybe would be afraid to invest in common equity because it's too much of a roller coaster. By the way, there are a lot of people that might like Bitcoin and they're afraid to invest in a spot ETF because what they want is kind of like Bitcoin with guardrails and or Bitcoin with a downside insurance policy. And Strike looks more like something with guardrails, than just buying the straight spot ETF that gives you pure Bitcoin vol. Strife, another example of a unique fixed income security. It attracts new types of capital. It's a perpetual dividend. There's no one offering a 10% dividend at par forever. It's very uncommon to see that. I've never seen that in any other security. And it's also, as Andrew pointed out, these things are high performing, but they're very liquid. And the fact that they're high performing and liquid is an appeal to an investor. And they draw new capital. And as capital flows into Strike and Strive, that's extremely accretive and leveraging for the performance of the equity. If you study banks, you notice the number one strategy of most banks in order to create leverage for the common stock is they issue preferred stock. It's a safe way to do it. It's mezzanine capital, mezzanine equity, if you will. And so, you could say we're doing something innovative, but we're also lifting a page from the book of conventional banking by putting in place this mezzanine capital structure. And if you would ask any bank, why do you do it? The answer is it's good for our common stock. It increases the yield, the dividend on the common stock without creating risk on the balance sheet. The last point I make here is that we have the potential to generate BTC yield in perpetuity via fixed income securities. The MNAV could go to zero. We can still generate yield by selling Strike, selling Strife, selling other corporate bonds, selling any fixed income instrument. And we also can scale up the sales of those things. In essence, if we're selling something 10x over collateralized by BTC, we can basically sell preferred instruments that are equal to 10% of the capital structure. And if Bitcoin goes up, we just keep scaling up the preferred instrument in the same way. So this is an opportunity that it isn't like it's one and done. It's like we could reasonably be doing this forever because there's always going to be a demand for USD yield. And if you believe that BTC is going to have the performance of the S&P index or more, then you'll always be able to swap BTC yield for USD yield and capture a spread. And if we can do that, then we can create performance which is superior to BTC, and we can maintain a multiple of NAV. I tend to think that a very reasonable way to calculate the right BTC premium for the company would be to take the expected BTC yield and multiply it by a multiple of 10 to 20. So if we can generate 25% BTC yield, then 10 times that would be a 250% premium to NAV, an MNAV of 3.5, if you will. And if you put a 20 multiple on it, you could find your way to a 500% premium to NAV. And so you look at all these things in their entirety, and then you take into account the rate at which we raise capital and the spread at which we raise the capital, then all of those things give you a sense of how we outperform Bitcoin.
So there you have it. You heard from Michael Saylor, the CEO of Strategy. In fact, what Saylor announced today is raising capital approximately close to $80 billion, just capital money all around the world to buy more Bitcoin. That is just going to be bananas where strategy is getting towards that, that 1 million Bitcoin hodl. I think it's going to be coming very quick in increasing the Bitcoin yield percentage target from 15 to 25% with an incremental increase in the Bitcoin yield price. So all of this is really bullish. Complacency is MSTR's biggest enemy now that, Saylor's strategy has been validated by others. More people are getting, towards that direction of implementing his strategy. So there's only going to be more players to the table. That's going to raise up Bitcoin price. Saylor understands the game. Buy up Bitcoin before it's too expensive. Doesn't matter in the long term. He'll continue to buy, but at that point, there will be the latecomers buying in at prices that are much higher than where it currently is. So definitely some opportunity that we see with strategy. And, as Bitcoin price gets to, new all-time high, we may very well see strategy get into that 4-digit range. So there you have it. I hope you enjoyed this episode. Let me know what your thoughts are from today's earnings report. Thank you. I'll catch you on the next one, guys. Take care.